Shit, I know a lot of people that could be using this video right now. A lot of people. Oh god, a lot of people. So we're going to go over how to effectively calculate and manage your risk in a trade. Too many people are losing a lot of money. Too many people are making stupid mistakes, and too many people are putting their stop losses in places that just aren't feasible for their account size. You need to be making sure that you are getting a good risk to reward on your trade. You need to make sure you're calculating it correctly, and you need to be using a lot size calculator. Most of you don't even know how much money you're actually going to be winning or losing per trade before you place it. As a hit and a miss strategy, most of the time you're missing to the point where you're blowing accounts. You don't even have any money left to keep trading, so what the fuck the point in that? We're going to look at calculating risk on short and long term trades. So let's get right into it. So say for example, if you can see on my screen here, we were going to look at, let's say for example we wanted to take a short position on NZD USD. If this is just an example, this is not a trade that I would place, I'm just showing you an example. Don't want anybody to start putting on this trade and then emailing me saying I lost them any money. Fuck that. So if you look at this, say for example we had a double top here, for example, and we wanted to enter a sell position. Now this is on the 4-hour chart. What we would do is calculate our risk and make sure we're managing our portfolio correctly. Let's say for example we had £1,000 in our account, which most of you will probably starting with £1,000, or some of you might be close to £1,000, plus it's an easy number to work things out on. So say we're looking at a short position, which as you know is a sell. So if we click the short tool here, and say we wanted to enter right here, you'll see that this has a red box and a green box. The red is what you're willing to lose, the green is what you're expected to make back. So for example, if we wanted to take profit down here, if we wanted to take their take profit down here at 182,474, and we wanted to put our stop loss just behind the high of the previous resistance, we do know it is quite a safe place to put our stop. It gives the trade plenty of breathing room. So we can see here, right here in the middle, that that's 82.5 pips, right? Nice and simple. And we are looking to get 168 pip return, and the ratio, risk to reward ratio, is just above 2. So that's a half decent trade. If you have £1,000 in your account, what do you want to be risking? You want to be risking 1%. What's 1% of 1,000? It's £10. So we only want to be risking £10 on this trade. We don't want to be risking 20, we don't want to be risking 30, we want to be risking £10. So how would we do that? In the last video we plugged in an app. We were going to show you this app. It's called STINU, Stinu, whatever you want to call it. So if we go over to the phone right now, you're going to be able to see that we've got our lot size calculator in here. This is what it's called. Download it, it's brilliant, it's going to save you a lot of money, and it's going to have a more accurate approach towards your trades. So for example, we have a £1,000 account balance. We want to be risking 1%, and our stop loss, as you can see here on the screen, is 82.5 pips. I would encourage in rounding up, so 83 pips. And we are going to be trading GBP pound versus the Aussie. So and then click calculate. Because we are calculating this after 10 PM, we won't be able to get a result right now because they're not exact market values that this can calculate on. It would only work in the market hours of between Sunday 10 PM and Friday 10 PM. So right now we actually can't get a calculation, but you're obviously going to be using this whilst you're trading, so you're going to be able to click calculate, and let's say that gave us a lot size of 0.83. So if we use 0.83, you might even want to round it down to 0.80. So you're risking round about 1%. If we hit above this area here, the chances are our analysis is wrong and we are actually going to have a reversal. So that means that we are out of the market, we've only risked 1%, we've only lost 1%, we're on to the next trade, our analysis wasn't as solid as what we thought it was. So we want to try and look for pairs where the risk to reward is extremely good. So for example, if you're looking at this pair right here and we're maybe looking for a break and retest, maybe something like this, and then take profit down here, that could potentially be a good trade. We could take a short position anticipating some sort of retest. We would wait for confirmation of a good entry. We would probably put our stop loss somewhere here, just behind these wicks, and then we would be looking to take our take profit over here. So again, 66.8, round it up to 67. We go over here to our lot size calculator. Again, this isn't in the market hours, so we're not going to be able to get a calculation, but we can still 1,000, risk 1%, 66.8, so we'll call it 67. Then we go over here and we put Euro GBP, calculate. Then we've got, say, a lot size of 1.02, round it down to one lot. Then we make an entry once the rules have been met and the risk to reward is looking very good. So this risk to reward is 1.5, which is alright. It's still anything less than a 1-to-1, don't even bother with. If you're a beginner, try and look for a 1-to-1, and then as you get more comfortable and you start getting a few more wins under your belt, start looking for 2-to-1s, 3-to-1s, 4-to-1s. Sometimes you may even get 8-to-1s. So looking for these types of trades, making sure that you're getting a good risk to reward ratio based on the account size that you're going to be using. Don't over leverage your account. Don't risk 2%, 3%, 4%, 5%. It's just not worth it. So if I'm in a euro pair right now and I see another great entry, say here, say I caught this way back here when it had a great reaction from this level and I wanted to be in that market there, I would either 1, pick the best setup and risk 1% on that, or 2, I would risk 0.5%. I might even put my stop loss just here and then take profit down to the bottom here. That's a 3.4 to 1 risk to reward ratio. It's a great trade. So I'm only risking, say, 25 pips and I'm looking to get 82, 83 back. So again, over the lot size calculator, we have our 25 pip stop loss. Again, in here, perfect, calculate. So then we would have our lot size, say it was 1.43, make it 1.4, and then we're in the trade, we would have entered somewhere around here. We would have entered and we would have had a great risk to reward ratio, and it may even look like we would have had our take profit. So looking for the best, most probable setups and also the best looking setups in terms of risk to reward, not just in terms of technical analysis, those are the ones that you want to be patient and wait for. You could easily be patient and get a couple of 3-to-1s, 4-to-1 trades. It's going to bank you 8% instead of trading 12, 15, 16 times, being up and down, up and down, up and down, up and down, wearing yourself out to maybe even make 4 or 5%. Trust me, being patient and staying out of the market is actually just as, if not more valuable than being in the market. If you could be patient and stay out of the market and look for the high probability setups with the great risk to reward ratios whilst protecting your portfolio, you're going to make a lot more money. You're definitely going to make a lot more money than I did when I started it. Because I was blowing accounts, that's what I was doing. So if we entered the trade here, okay, and our entry point, as you can see in the grey here, is 1.16988. What we would do is, if your stop loss is here, if our stop loss is at 1.17231, what we want to be doing is, if once this moves away from the level that we have traded and gotten in from, and we have some sort of like a pullback, so what we want to be doing is getting our stop loss to entry as soon as humanly possible. So our entry is 1.6988. So once this price action starts moving away from the level, we're going to feel more comfortable to put it at entry. So once you put your stop loss at entry, zero risk is on the table. So if you get taken out, you get taken out at zero. And then what you want to be doing is just carefully following the market. If we get another area here that we can maybe put our stop loss in, we are locking in profit. You know, so if we are entering at 16988 and we put in a stop loss at 16586, that's going to be 30 pips profit that we banked ourselves, and based on the 25 pip stop loss, that's just over 1%. And if it goes against you, the worst possible case is that you make some profit. That's how you want to be managing your trades. That's how you want to be getting in your trades. And it's also how you want to be looking at the markets. Be patient for these types of setups, because they're not going to come about very often. It does require patience. I know being in a trade can be fun, but fuck me, losing trades is even worse. So please just be patient. Look for the high probability setups, the best risk to reward ratios. It's easier said than done. Very, very easy to ignore this, and very easy to get in trades that you try and force them to look good. You force things to fit, and it just never ever works out. Be patient. Always, 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 always plan your trade and trade your plan. If you don't have a trade planned, don't trade it. It's that simple. If you see a massive, massive bullish momentum, massive bearish momentum, and you are tempted to get in, but if you don't have your stop loss set, if you don't have your take profit set, and you're looking to just get in the market without any of that being pre-planned, you're going to waste your time, you're going to waste money, and it's not a good strategy. If you see massive momentum going in one direction, and it might have been something that you've been looking at for a while, but your trade hasn't been planned, do not trade it. Don't trade it. Have strict rules. You have to plan your trade and trade your plan. If you don't have a trade planned, don't trade it. Don't just jump in out of fear of missing out, because you're going to get burned every single time. You're going to lose your money, and it's not a good strategy to be approaching the markets with. It's one surefire way to lose all your money very, very quickly, and you're going to fall in love with trading, and you're going to think this is a scam, when all the problem really is you were just being impatient. You were picking low probability setups, and you were not able to execute them as you planned them out. So I hope this has helped. I hope I could save at least somebody blowing their account, because even sometimes I need to look at videos like these every now and again. It's very, very hard to stay disciplined. It's very hard to risk 1% of your portfolio. I understand if you've only got £100 or £1,000 to start off with, it can get frustrating. I understand people want to quit their jobs. I understand all this, but if you get the basis right, the fundamentals right of making those small wins, planning your trade every single time, and then trading your plan, and then getting consistent profits, when you do start to manage a bigger account, it's all going to be a lot easier, and it's going to be a lot more manageable for you. Make sure you hit the like button, subscribe to the page, and we will see you in the next video.